using timeframes and why it's an important factor when identifying levels of support and resistance. So if we go back to our previous lesson on candlesticks, you'll see that we're on the Bitcoin USD chart and we're on the monthly time frame. So quickly recapping that lesson, we know that each one of these candlesticks represents the price action of this asset in 1 month. So each of one of these candlesticks will be made up of about 4 weekly candles, around 30 daily candles, and about, let's say, 180 4-hour candles on average. So as you can imagine, a lot of time goes into making each one of these candles. And then if we're using the method that I mentioned in the previous lesson on how to identify levels of support and resistance, and we're looking for those bullish and bearish trends, the start of those bullish and bearish trends, which is 2 candles of the same color in a row. Each trend has taken, as I say, about 2 months, 60 days, etc. to form, and it's that aspect of time which gives it so much strength. So what that means is that the higher the time frame they go, the higher the time frame you go, the stronger the level will be, and therefore the more likely it is to be respected and either hold as support or resistance, whichever way around it is. So when we break down a chart and identify levels of support and resistance, we want to start on the highest time frame possible and then work our way down. A, because of the strength factor, but B, what you'll see later on in this video is it's also comes back to that factor of keeping our charts tidy as well. So what we're going to do, we're going to mark out a few monthly levels on this Bitcoin USD chart. I'm just going to stick to this 2017 to about 2020 cycle. Just do a few levels here just so you get the point. We'll break it down, go weekly, daily, etc. So what I'm going to do is I'm just going to use the line tool as opposed to the box to make it a little bit quicker. And what we do is we start, as I say, on the highest time frame possible, and then we work our charts from left to right and go from there. So the first level we're going to mark out this one here, 1070. I'm just going to go template, make it a monthly, and turn the text on so you can see other stuff. And then, so as I say, start of this trend here, April 2017. Next one we've got is the start of this trend here on the October 2017, because we got this little break here during September. So start of a new trend here. So I'll quickly mark that out. And as you can see, this is a really, really key level. If we just take a quick look at this one. So marked out the level here, we go along. It tried to hold on the November 2018 on this huge down candle here. Lost it, and it then held as resistance after 1, 2, 3 months of trying between December 18 and Feb 19. And then again on March 19, didn't quite close over, and then finally broke over the following month on April. Huge rally, and then as you can see, it marked the bottom of the COVID crash as well back in March 2020. So really, really strong level there. Next level we're going to mark out is going to be this one here. So as you can see, we didn't get 2 candles of the same color in a row until we got down to this candle here in May 2018, and again a pretty strong level. As you can see, didn't hold resistance on the first time, broke over the top, held as support, then lost it, and then acted as resistance from September 2019 all the way up until June 2020. So really, really strong level there. And then once it broke over the top, came back down, held as support, and then went again. And again, it's pretty much 10k, very strong round number psychological level as well. And then from there, the only other level I would probably mark out is this one here at about 6k, which is the start of this trend here. So what you'll notice is, yes, there are other levels that you could potentially mark out, but what you don't want, we're not marking out every single time there's 2 candlesticks in a row. So for example, this level here, what's that, 3,400, I wouldn't mark that out because it's too close to this 4,100 level, and what you're going to end up doing is making your chart really messy, and it's just going to get quite confusing. So it is obviously subjective which one you choose, but what I would advise is just look left and right at the chart, which level has been more respected. And as I say, if we quickly just put that level back on, as you can see, this hasn't really been interacted with at all, whereas this level here at 4,100, as we've been support and resistance throughout. So I would choose the one that has been respected the most. And also, if you were to just go and mark out every single time there's 2 candles in a row, it would obviously be quite chaotic. So it's all about being selective of what support and resistance levels you use. And similar again to this level here at 10,400, you see, yes, that is the start of a trend. However, it's very, very close to this level of 9,990, which has been respected throughout. So just a little tip there on identifying those higher time frame levels. And now going back to our point about keeping things tidy, if we now break this down to the weekly time frame, you can see we've already got some levels in place. And you can imagine if we started with a blank chart and we started, say, on the daily time frame, go back to the 2017 cycle, you can imagine how many, I mean, just hundreds, if not thousands of 2 candles in a row trends to mark out, and you would just be like, where on earth do I start? Well, that's why we start on the highest time frame possible, on that monthly time frame, or if you're using trading forex, etc., you could probably use the yearly. But it just means that a lot of the work is done for us. So if we then go down to the weekly, we can then start having a look, right, what weekly levels make sense to us. So again, we're going to start on the left hand side and work our way across. So first one I would see is the start of this bearish trend here. Quickly make that a weekly. As you can see, resistance, held as resistance, broke over the top, then held as support, and off we went. Didn't quite make it down there in the December 18 drop. The next one, which looks really obvious, is this one here, which is the start of this trend, November 2017. As you can see, that is a huge level, but just under 6k. Support, broke through resistance, and then it didn't quite get respected back here, but it was a pretty big level back here. And to be honest, what I'd actually do is I wouldn't have this level on my chart anymore. It was obviously very well respected back here, but more recently it hasn't been, and we've now got this monthly level here at 6180. So again, that's an example of keeping your charts nice and tidy, keeping them updated. What's the most recent and most respected level? And for me, that level is no longer relevant, but you can see how relevant it was in the past. Again, if we sort of make our way up this huge trend here, because that was the start of the trend, we've got nothing else. First one would be this one here at 16.3, because it's the start of this bearish trend. Oh, nearly missed that. And again, if you look across right, you see how it was respected here in November 2020, broke over the top, came down, perfect retest of support, and off it went. Next one would be the start of this bearish trend just here at 11,975, and again you can see how well respected this level is. If you look across, resistance all the way from June 2019 to August 2019, and then again July 2020, August 2020, until we finally broke over the top. Didn't actually get a bullish retest of that, which is fairly surprising, but maybe we get that retest in 2022. As you can see, we are just about hanging on to this 16. In fact, I didn't show you that just a minute ago. That level we marked out just a second ago, that is the level we're currently sat on current day in December 2022. So you can see how well respected these levels are, even a year or 2 or 3 later. So yeah, that's just a quick example, guys, of how we break down our charts. And then if we were to go into present day and look at the daily time frame, again, a lot of the work is done for us. In fact, no, not go present day. Let's go to where our levels are marked out. So if we were to be here in sort of July 2020, October, September, etc., you can see that a lot of the work is already done for us by the time we get down to the daily time frame. So we're not sort of thinking, oh, where do we start? What do we need to mark out? It's already done for us with these higher time frame levels. And as you can see, I like to color code mine. So monthly is white, blue is weekly, and then I use red for daily, etc., and work my way down. The other thing I do, as you can see, I've got templates. So I've got a template for each one. So my monthly levels are visible on all time frames. You can check that by going on visibility. If I then change to a weekly visibility, you won't see my weekly charts on a monthly time frame, and I'll just show you that in a minute. So levels like 11,975 and 990, if we go to the monthly time frame, you will see that they are not visible. And again, it just comes back to that point of keeping our charts nice and tidy. But then if we go down to the daily, and let's just mark out some daily levels. Let's go in here where we've got a lot of the work done for us, as I say, with the weekly and monthly levels. So again, we'll look at where some trends have started and some support has flipped to resistance. You can see this little trend here starting on the 12th of August 2020. You would mark that out, and as you can see, support, lost, come back as resistance, tested again, broke over the top, again tested support, and off it went. And again, I would mark that out as a daily, and then we can go on to text, and then, as I say, visibility. It's not visible on the weekly or monthlies, because you could imagine if you mark out quite a few daily levels, as you probably would, then you go on to the monthly time frame, you've got all your monthlies, all your weeklies, all your dailies, and it would just be a complete mess. So that's why we like to keep it simple and keep it nice and clean. So little lesson there on how we break down our charts and our levels of support and resistance from a monthly down to a daily time frame, and you'll see more examples of that as we go through the course.